Welcome back to the podcast, guys. Today we're joined by Alan Snyder, who's the managing partner of Shinnecock. Did I say that right? Shinnecock
Perfect.
Partners? Yeah, perfect. And the founder and CEO of, is it AShareX?
AShareX.
Perfect. Hey, welcome to the podcast, Alan. If you could, do you mind telling us a little bit about yourself and what you guys are doing there?
Sure. My checkered, misbegotten past, being, as you can tell, the young sprout that I am, spans a number of years. I start companies, and I'll bore everybody just for merriment. I had an experience when I was young, and it certainly has shaped me. When I was 18, my father died, and when I was 19, my mother died, and when I was 20, I had a guardian, sort of. Never heard from him. He died. So it was a pretty cool and breezy experience. Now, adding insult to injury, uh, through some incredibly poor financial planning, uh, I went from a very comfortable life to one that was pretty cool and breezy and very, very financially challenging at a young age. Now, I hope it didn't scar me, but I think it made me, in my world of investing, which is where I spent my career, always saying, how do you make it better for an investor? And I went to Wall Street, great, worked at a big firm, and with a couple of other people started the Discover Card. Now, the neat thing about the Discover Card was we said, how do we open up a credit card to the 26 million Sears cardholders and make it more available to people? That was the goal, and I could passionately embrace it. Then we did something else. Instead of complicated gifts and all the other crap that credit cards do, we said we would give people cash. Why? Because we were dealing with a lower demographic that had never had this opportunity. So that warmed my black heart. Years later, okay, so I did that for a bunch of years and ran the product areas of the big securities firm. Fine. Toddled off, did a bunch of things, started Shinnecock, which is a investment boutique, and then had this other crazy ass idea, Jeff. I said, what if you could give people knowledge to be intelligent buyers of insurance? How prosaic. As everybody said, it's like watching paint dry. Anyway, said, when we buy auto and homeowners insurance, we're kind of toast. We don't have enough knowledge to compare different alternatives. So I said, what if we could create an insurance exchange and give people knowledge to comparatively shop for those products? And again, that sort of, let's change the world. Well, battered and bruised, the technology was brutal, and we raised a lot of money to do it. Eventually, we became the largest seller of auto and home as a non-carrier in the United States. Oh my goodness. And happily, Allstate landed on our doorstep at one point and said, well, get out of the way. We're bigger than you, which was certainly true. We'll buy it. So sold it to them. More recently, I said, the world of investing is changing. How do you open it up to more people? And you and I hear Wall Streeters shouting, come one, come all. It sounds really inviting, but it's not true for all investments. In truth, it's really more like a drawbridge is pulled up, barring access except to very wealthy people or institutional investors. Sure, pretty much everybody can invest in stocks and bonds, but generally not alternative assets. You don't get to play. And I've said, well, there's something wrong with that. Why do wealthy people seek those assets? They seek them because it's a form of diversification. Imagine, venture capital, think SpaceX. How about music royalties? How about drug royalties? Powerful. How about high-end real estate? Think about a Picasso painting worth $30 million. Hell, how many people can even play? You got to buy the whole damn thing. You're toast. You can't play. How about a Ferrari? Most people can't afford a Ferrari, and yet cars have appreciated like crazy over the last 10 years. Wouldn't it be kind of neat if you could get a piece of that Ferrari. Okay. Those on the inside get it. They understand that stocks and bonds can be great, but diversification lowers portfolio risk. You kind of have an anchor to windward against, we're currently going through some turmoil. All right. But to those on the outside, all of those people with the drawbridge pulled up, they're screwed. They can only watch. And, to get a little more specific, alternative asset investing typically is limited by what's called Regulation D. You have to have a very high net worth to even be offered the opportunity.
Is this the accredited investor
Yes,
require? Right.
it's the
So what is it? Based on memory, it's you must have $1 million liquid, not your home. You should be making a quarter million a year for a few years in a row. So basically, the government is saying you're not qualified to take a risky investment, which seems to be the high risk, high reward investors. So let us take care of you and hold you back. But feel free to go to the casino or buy a lottery ticket. That's fine. But
yes,
but
or
if you want to be at this table, you must already well be high income and or rich, right?
yeah, or waste all your money and betting on Polymarket or Kalshi or stuff like that. That's fine, but no, owning a piece of a collectible painting, no good. And then what's worse? So then you think about it. You have these high net worth requirements. You only have a limited number of people that can be offered. Wow. And that's the way most of these deals are structured. Furthermore, I love this part. As an investor, and I'm invested in those kinds of deals, money manager says, Jeff, this Picasso is worth $30 million. This apartment building's worth $100 million. And you say, well, yeah, but is that a current price? And they said, well, do your due diligence. But we say it is. Well, there's very little price discovery because the money manager is setting the price. Furthermore, and most of these deals, Reg D particularly, they're exempt from SEC review. Yes, you have lawyers, but you don't have that very demanding regulatory body, the SEC, saying, well, is everything disclosed to the investors? You don't get that. Compounding this, and again, since I grew up in Wall Street, maybe I'm holding up a mirror for myself. Once you're in, you're in. Money manager says, well, the regulations say we have to control. And then they're controlling and getting a money management fee, let's call it 1% to 2% a year. And they say, Alan, we have your best interests at heart. We'll sell this when the time is right. And I say, wait a minute, I put up the money. Do I get a vote? No, you don't. And being the cynic that I occasionally am, those fees are pretty sweet for the money manager. So you have this risk that the holding period gets longer and longer. It's kind of like, the Eagles song, Hotel California. You can check in, but you can never leave. All right. Particularly painful, and then to me, maybe an opportunity. Alternative assets, all of the things and more than I described, they're expected to grow to $30 trillion in the next 5 years. Well, innovators, I'd like to think that we are trying to change that and lower the drawbridge for all of these investors, empowering ways to allow people to participate. I think AssureX is a leader in that space, but really pulling the camera back a little bit. What's the new phenomenon? Fractionalization of ownership. Owning a piece of an asset without the requirement to buy the whole bloody thing. Breaking alternative assets into shares under regulatory oversight. That's kind of nice, to make modest investment levels possible. Expand ownership to the otherwise disenfranchised people. I think that's pretty neat, and it's happening. In addition, let's add some spice to the broth. Let's lower those investor requirements. That's doable with the Jobs Act, which opened up a new form of security called a Reg A Tier 2 security. Reviewed by the SEC, there's any stock offering. So you get stock. That's powerful. The requirement is basically 10% of net worth or 10% of earned income. So much reduced, opening up the aperture, lowering the drawbridge for all these new investors. Then we did something. This is a little bit unique. In fact, at the moment we have a bunch of patents on it. I said, why not create an auction where fractional bidders can compete with each other and 100% bidders all in the same auction to get true price discovery, a current price and when you're investing it. Neat. Then you can tell I'm really cranky. Ask my wife. Let's give control to the investor. Let's let the investor decide when they want to exit by a simple majority vote. Say, okay, I've been in this enough. It's appreciated. Sell the bloody asset. The car, the Picasso, the song that you invested in.
The whole asset or the fraction of the asset?
No, you get to, you add up the fractional bidders' vote,
Mhm.
buy their shares, and say, sell the whole asset. Now,
Oh.
because you've got this public security, let's also, if the asset is big enough, you'll have a secondary market. Okay, instead of saying, I want to sell the whole asset, maybe you just sell your shares to somebody else. That can happen if the asset that was sold is big enough. Now, so you're giving control. God, it's an overworked word. You're really democratizing investing. And I love that thought. Now, I don't mean it. The deeper idea, it's not just financial. It's cultural and generational. As passions shift from boomers like me to Gen Xers and millennials, so do the assets that people value and enjoy. Peter Lynch said it all. Invest in what you know. So you see this huge burgeoning effort of people investing in a $6 million baseball card, a comic book for $12 million. Why? They either have it in their own collection and they're knowledgeable in it. I want to invest in a car. Okay, great. Invest in what you know is what Peter says. Pretty powerful. Now, fractional ownership transforms investing from a system defined by exclusion into one defined by participation. From a privilege of the very few into an opportunity for the many. I believe that when ownership broadens, the entire economy is more inclusive and more resilient. This is happening now. The future isn't tomorrow, it's really today. Now, AssureX, what has AssureX done? One, created the auction system. Hard. Took us a month of Sundays, 3 years of hard work, a bunch of money to build the auction system. We can do it as an English auction where the prices escalate, okay, or a fixed price offering, if you will. Get true price discovery. Wow. Open it up. Now, an exchange requires two things: buyers of an asset and sellers of an asset. Think about what this is doing. Now you have a huge new cohort of potential buyers that you're bringing to anybody that wants to sell one of these types of assets. So for a seller, it's very powerful. And we're beginning, AssureX is a new company. We're getting people that are interested. For example, we had a large car company in the UK come to us and say, Alan, we think we should use your platform. Wow, great. Okay, what do you want to do? We want to sell collectible cars through you and fractionalize them and give them all the benefits that you've just bored everybody on this podcast with. And so we're in the midst of offering a concourse quality Ferrari at assurex.com, and you can enter a bid, get your piece for as little as $100, or somebody just put in a bid for $50,000, whatever is comfortable. Now, I know this will you make you smile. I'm sort of hung up on giving people open kimono. So on our website is endless stuff detailing Ferrari pricing. Now, this particular car, for anybody that's into cars, it's pretty neat. It's in England, in London, and it's a left-hand drive Ferrari. Perfect. Perfect specimen. I have about 1,300 miles on it. So it's basically been kept since 1980, garage, occasionally driven, very little, very low mileage. That makes it special. But it's a left-hand drive, so you have pricing in London for a left-hand drive is less than the US. As a occasional investor, I like that. That means if people own it, you could always bring it into the US and get a pickup in the value by selling it in the US. That gives some, I believe, some downside protection. Cars, as you know, you say, well, what the hell do I want with a car? We've organized with these guys. They have a huge storage facility now. So they store cars, and they would store this until the investors decide to sell it. They put air in the tires, they rotate them, they change the oil, they start the car every so often. So they take care of it. That's one of their businesses. So think about it. Now you can invest. The car gets kept in a climate-controlled environment, so it's protected. No, you can't drive it because that would lower the value of it. And you wait for it to appreciate. And cars, exotic cars, have appreciated like crazy over the last 10 years, and people should do their own homework and verify that everything I'm saying is true. I've owned exotic cars, and I think it's been a great investment for me, so maybe that makes me a believer in it. So we'll do that with X.
Well, I love the website and I love the range between baseball cards, comic books, vintage cars. There's something tangible. Again, what would you do if you were rich? You would buy one of these cars, you'd get your favorite comic book or baseball card. And I know the scarcity of a limited supply of these things, right? So there's the inherent value. I like the idea of changing jurisdictions or downside protection. You brought the Ferrari from UK to US. This is a bigger market, that. So that's very interesting. Opening up access to alternative assets, democratizing. Here's my question. Without disclosing anyone's personal information, what type of customer surprised you that's not a regular who's already in the club? Like, are you seeing a cohort, whether it's international or demographic, like a college student? I don't know. I don't even know how to ask it other than, do you have customers or investors since you've opened it up that you wouldn't have seen in your Wall Street days?
Yes. For example, I can't disclose too much, there's a relatively young man that is into all this stuff, and he's a bidder. We have classic investors that were unaware that they could even participate in this kind of thing. We've been approved. I think this is a particularly interesting use case for our company. Imagine a Beyonce catalog of songs. Okay, they sell these days for somewhere between 25 and 500 million. Again, institutional type investors. No way for fans to participate. Think about selling a catalog of songs by a famous artist, giving the fans the ability to own a piece of that artist.
That
Wow.
opens up a new way to support your artist.
Yeah,
Yes,
a new way to support, and you're passionate about the artist.
and you know the stuff. Invest in what you know. If you've memorized their lyrics, you go to their concerts,
That's right. You sing along.
you probably have a point of view that, maybe someone in the suit doesn't have.
I'll give you another interesting one, which we haven't talked any specifically, but my wife is a avid Wisconsinite from Green Bay, Wisconsin. So you think about the Green Bay Packers. The Green Bay Packers are owned by the people of Green Bay. Their fans are incredibly passionate about it because they have, I don't know, 5 shares, a little piece of the team. So they're really engaged. Imagine taking a sports team and selling a small piece of the sports franchise to the fans. Now, from the owner, more fan engagement, and for the fans, I can participate in the success of my team. Pretty nifty.
I think so. And young people having fractional shares of anything is introducing them to property rights.
Great insight. Yes.
One of the things that I see is the unit bias or to buy a home in an expensive city, good luck, and so then you have, a renter class. And the sooner young people, college students, what have you, working class people can have fractional ownership of anything, then they enjoy property rights and then they become better citizens. And I think it will improve society. So,
I Good insight. That's my hackneyed phrase, inclusive and more resilient economy. I think that's true. I think it's true. You're giving people a chance to invest in spaces maybe they feel more comfortable in. Have more knowledge than buying a piece of some arcane stock.
yeah. Well, and speaking of that, I guess the best analogy I can say is Warren Buffett, Charlie Munger, Berkshire Hathaway. They had a stock that's a runaway success, but they never, what is it? Fractionalize or not fractionalize it. When you split it, they never split it. So
That's right.
you have this stock from, let's say 70s, so 50 years ago, and it started at, let's call it $25. Well, now it's 250,000. And again, as a young person, a millennial or whatever, 250,000
You're
missed
screwed.
the boat. I guess I can't afford skyscrapers in Manhattan, even though they always go up. And so what happens is it's like coulda, woulda, shoulda, and you just hand wave it away. Whereas, the technology stocks, if it gets too much, they just, they split it. So there's a psychology for retail now in this day and age, you can have fractional reserves or tokenization. So what the point is, wherever you are, if you wanted to support, the vision of Warren Buffett, who we all put on, the pedestal, everyone knows as a household name. Yes, the Berkshire Hathaway single share is worth $250,000, similar to a great car or piece of artwork, but you're opening it up to where somebody can come to the table with whatever they have and get a proportionate fraction so that we don't have to play that psychology trick on retail. And I think this is wonderful. So, what you're doing with physical goods, I would say, is of high value, of high growth. And how do we open it up where people don't just mentally price themselves out of it?
Well, again, it's cars are just one use case, but when I got a bonus when I was working on Wall Street, I bought an exotic car for $35,000. I worked on it, polished it, did all the right stuff.
What was the make and model? Go on.
It was a
Tell us.
Maserati Ghibli Spider.
Cool. Okay.
That car, maybe I sold it too soon, sold it ultimately years later for 250,000. Like 3.5 years later. Owned now, this is funny, a Duetto Alfa Romeo, famous from the Graduate movie, dating myself. Same kind of phenomenon. Bought it at an auction, didn't pay very much for it, put a new windshield in, did some other stuff, and then sold it 4 years later for 3 times what I paid for it. Not every car is going to work out, of course, but that was my own personal experience. It worked out great. And that's the opportunity. Pick your poison, whether it's music or drug royalties, sports teams, a car. For example, we put together one of our early auctions. This might be interesting. We took 6 pedigreed up and coming artists and 8 artworks from those 6 artists. And we said, all right, they won't be very expensive. So let's fractionalize them and, in effect, create a venture capital fund for up and coming artists. And we auctioned that off. We processed more bids in 4 minutes than any auction house has ever processed, I believe. And so people have tucked that away as a venture capital investment in art.
That's
Kind of
awesome.
crazy.
We're recording this early February 2020, the week before the Super Bowl. So that's our timestamp context.
That's right.
Last question. What is coming up next? Are you, if you feel comfortable hinting at, is there a new car or is there a new asset class? What's next for your platform and what you're excited about?
Well, we had a couple things. One, stay focused, Alan. We want to finish and get this Ferrari sold, this 328. Great. Second, we have a super exotic Porsche that people want to use us to sell. We have some really nifty collectibles that are coming down the path that are very interesting. Now, I'll give you an example of things not to do. We talked to somebody that we had a motorcycle that had been owned by Elvis Presley, and we seriously engaged with the owner of that asset. The owner had expectations to what it was worth that we didn't think were sustainable. We thought it was too high. So, yes, pedigreed motorcycle with an interesting provenance owned by Elvis Presley. But we said, geez, we don't feel that it's comfortable at the pricing that this individual had in mind. So we passed. And as it turned out, we understand our instincts were correct. It was sold for much less than was being offered to us for. So we said no. So it's that kind of tension.
That's great. Well, I think this has been an amazing episode. We could keep going forever. There's a
Yes.
lot of, I have more questions, and I'm sure hopefully the people listening have questions too. And so I guess the last question will be, where can people find you, Alan? So of course the listeners and people that want to pull on some of these threads or inquire about some of these cars, for example, what's the best way to reach you?
Here's what I would say. You can reach me at A Snyder, Snyder, at I'll give you the one, Shinnecock, because for any golfer, they may know Shinnecock, or Alan at asharex.com, either one. And go on the AshareX website. What the hell? We'll bore you with information. I think it's kind of fun, and you can get a flavor for it. By the way, one digression. When we did the research, Jeff, we discovered that people in auctions aren't always as comfortable as they would like to be. So we said, well, hell, how do you solve that? And we looked around high and low, and we couldn't find anything that gave people like knowledge about how to go at charity auction, any kind of auction. So we created Test Drive and Auction on
Hmm.
our website with the technology for an English auction in this case, where you can bid on all sorts of fun things. We effectively gamified it. And
Yeah.
basically, we say, Jeff, tell us which one of these assets do you want to engage in? B, how much do you want your bidding limit to be? And three, do you want to bid as a fractional bidder or, given in your case, 100% bidder, like might be? And poof, you go into an auction. Now, the power of computers, you're now into an auction and you're competing against hundreds of other bidders, and you can practice your bidding strategy.
Hmm.
Pretty nifty, kind of fun, transcending us for sure. Use it for a charity auction, get comfortable, whatever. So that's on the website. Again, I talk too much. I apologize.
Oh, that's wonderful. And you've really thought about the end user, the customer is this is not someone who's in the Wall Street Club. So you're democratizing this. And I think yeah, this is really interesting. It's like, do I personally have auction experience? No, but you see it on TV and with the Sotheby's and the art stuff, but that's a very specific, base. So if you want to open it up, yeah, practice.
eBay.
Yeah. Yeah, exactly. That's wonderful. We're going to do our best to put all the links and the emails in the show notes.
Okay.
Alan, thank you for sharing your story, your point of view, what you've built. This is all really great stuff.
And hey, Jeff, all the best to you and your skirmishing, which you've shared earlier.
Oh, thank you.
I'm rooting for you and counting on you.
I appreciate that.
All right.
All right. Great
Tha-
show. Thanks, everybody. We'll see you next time.
Bye.